We're joined by Anna Bligh. I think you're one of those people who really don't need the bio. I will say, of course, that we all came to know Anna Bligh very well during her period as Premier in Queensland. And for many of us, during those remarkable daily teleconferences you did and news conferences during the period of the Brisbane floods and cyclones, a template for Australia, I think, in regard to how to communicate in the period of an emergency. Your period in the ABA was coincided with a remarkable... another cyclone, coincided with a remarkable time in the history of the banking sector and finance more generally in Australia. Everybody here will remember a period of extraordinary turmoil for the banks. And you might be thinking to yourself, why would we be inviting Anna to speak at a conference about contemporary energy issues? Well, there's probably three reasons in my mind. The first, of course, is that as Premier of Queensland, you ran a very, very large energy business, network and retail. But the second is, of course, this question about communications, as I mentioned to you, and how it is that a leader can communicate a narrative to put people's minds at rest. And as we've all spoken about yesterday, that's an area of very significant underachievement in the energy transition. But the third is one of the main topics of conversation for us, is how is it that an essential services sector, in the context of very, very low consumer trust and a level of crisis, can reinvent itself, reconstitute its thinking about who it works for and how it works for those people, and then come through the tunnel. Which is not to say that the banking sector is perfect, far from it, but it's a different creature today, I think it's fair to say, than what it was some years ago. So I've got a few questions to kick off proceedings, but please remember you've all got access to Slido on the conference app. And so please shoot through any questions that you have for Anna. We've got half an hour to talk through a variety of things. I thought first, Anna, if it suits you, you came to the ABA, I think in 2017, and you were there until last year, so you saw this remarkable arc. I'm interested to know from your perspective what your sort of day one experience was and your observation of the sector at that point, what it was, and then what you saw it becoming and what achievements it made over the period of time that you think also would be helpful for some of the energy sector participants here to hear.
Sure. Thank you very much, Brendan, and thanks for the invite to be here today. I'm happy to share, experience and reflections, and hope that some of that's useful to you in the work that you're doing. When I think about a sort of from and to, the one thing I would say is what it's not is, something very bad to perfection. There's still work to be done. There'll probably always be work to be done. But that doesn't mean that a great deal of change didn't happen. So when I started, I knew exactly, I knew I was walking towards the fire. The banking sector had lost significant trust among both the public, their consumers, their customers, and importantly, increasingly the regulators and government. The then leader of the opposition, Bill Shorten, was running a very effective campaign calling for a Royal Commission, and banks were helping him almost every single day by being on the front page, with yet another scandal, yet another example of something that they hadn't got right. So there was no surprises in that regard. I knew that I was walking into a situation where something that is actually very important for the country and very important for the financial well-being of every Australian was not getting it right.
Yeah. And
so that for me was a very... that was one of the attractions, it was something that mattered, needed to be fixed, and that was part of the challenge. And I think, I'd probably characterise the kind of from to, firstly, I think the banking sector, it came out of the global financial crisis incredibly well. Australia's financial sector remained strong, solid, safe when others around it were falling over. Out of that, various jurisdictions, and jurisdictions like ours, like the UK, government and regulators sort of then came out of the GFC and said, well, what went wrong? had commissions of inquiry, found all kinds of behaviour that had driven poor outcomes for customers. And that didn't happen in Australia. And there was, I think, quite a lot of hubris about that. We did so well out of the global financial crisis. We're the best banks, and everybody's feeling pretty happy about that. But actually, they were selling some of the same products that banks in the UK were remediating customers for. There was big writing on the wall. So something like credit card insurance. The UK was, that was one of the big things out of the Royal Commission that they had, or the Commission of Inquiry. They had massive remediation programs, repaying customers for those fees for products that the customers, in fact, weren't eligible to even use. And yet banks here were still selling the product. And so I think there was a bit of a sense, well, a lot of a sense that, these issues around customer fairness, looking after customers, that's important, but it's somehow something peripheral to the main core commercial business of the bank. And I think what those 2 or 3 years in the lead up to and immediately during and then post the Royal Commission brought home in a very visceral way is, if you are in a business that touches every single Australian, that really relies on a social licence to operate, and you breach that, then and you breach it seriously and persistently, and you lose the trust of the community, actually it has a massive commercial impact on your business. Every one of these banks, all of the listed banks certainly saw a massive hit to their share price that persisted for a number of years, so big impact on shareholder value. They all, not all, but most had very significant remediation programs that were high cost. They had warehouses of people going through files and going back years. And there's probably many of you in this room, I've had 2 or 3 checks in those first 5 years, $19 for some fee that they shouldn't have charged me. I never got a big check, unfortunately, but that told me just how extensive these programs. I got, as I said, literally a $19 check for they'd overcharged me on a fee for an account that had actually been closed for 4 years. So that's how detailed those remediation programs. And if you've ever run one, you'll understand the cost of running a remediation program like that. Several banks paid very, very high fines, including $1.5 billion fines to AUSTRAC for getting money laundering reporting wrong. And then the long-term price is out of the Royal Commission. The banking and finance sector now is subject to 500 pages additional regulation than they were before. And so this is regulation that was imposed on them, I would argue, because they failed to impose it on them. They failed to impose doing the right thing by their customer on themselves. Yeah. And so government and regulators are obliged to act in that circumstance where they see things that are not fair, not right, and don't meet community standards. So, I think the other really important thing was it wasn't just the Royal Commission. As a result, particularly of various things that happened at the Commonwealth Bank, APRA decided to undertake what they called a culture review. They appointed a group of independent reviewers, and that ended up with a document that deeply examined the culture that was allowing these things to happen inside one of our biggest companies in Australia. And that document, I think, possibly more than the recommendations of the Royal Commission, because it went so deeply into examining culture, as the Royal Commissioner said, this stuff's already illegal. I can't outlaw it twice. What is happening inside these companies, that this is, this is allowed to happen not on a once-off, but as a persistent, almost in some cases, part of the business case for the product or the practice. Yeah. And so it was the APRA review that really deeply examined that. And then APRA said to all of the other banks in the sector, we want you to take this review and examine it and do your own review along these lines. We want to see the outcome, and we want you to have an action plan, and we're going to monitor that. And one of the big messages out of that APRA review was that all too often CBA had asked themselves the question, can we, not should we. One is a legal question, one is a moral and ethical question. So, I think there's a message there for every sector. It's,
Indeed.
If it's an essential service, people are going to be looking at, not just are you acting legally, but are you asking yourself the question, should we?
Yes. I should make one point of self-disclosure here for the audience. Some of you would know. I met Anna when I was working at the Commonwealth Bank, and part of my role was looking after remediation. And just so you're aware in terms of the impact of remediation, I had 780 people on my team just doing remediation full-time at an operating expenditure against the CBA group balance sheet of 12.5% of global cost. So that's the kind of numbers that we're talking about to fix problems that sort of sit embedded in the business.
And this sector is the same as banks in the sense that, every Australian uses energy, and it's essential. It's not something that you can choose to go off the grid, but basically that's the scale of activity that we're talking about.
One of the questions that I had, and there's a couple of questions coming through Slido, so please remember you can add more. One of the questions I was going to ask in terms of the distinction that I see from banking to finance, in the Corporations Act, as many of you know, Section 912A, if you want to look it up, there's 3 words that oblige the banks, and that is that they have to operate honestly, efficiently, and fairly. And that'd been there for a while, frankly. I don't know, because there wasn't really any enforcement around it, and it wasn't even a requirement that was met with any obligation from the banks. Fairness was a very abstract term. It was something, what's fair to you is different from fair to me. They'd not really thought about it, even though there was obviously quite a lot of jurisprudence about what that means. What happened, though, through the course of the time when you were at the ABA and the institution of a code of conduct, for instance, for banking, and a lot of regulatory changes that obliged the banks to really work out what fairness and honesty meant, as well as efficiency, which they certainly already knew, and that proposed for the banks an obligation to consumers, rather than just all the obligation being from consumers to the banks. In the energy system, the way that the obligations are currently written, there's an absolute preponderance of effort on efficiency, but there's no reference to fairness or to honesty or to some equivalent like best interest or do no harm or whatever a general principle might be. The way that worked in banking and the maturing of the banks and thinking about that is something I can see maybe happening in time here in the energy sector, something we're interested in. Is that part of the shift, that banks felt an obligation to their consumer and not just the other way around?
Absolutely. And I think part of that was because of the way the public reacted to the Royal Commission. But I think it was also very much driven by regulators, and banks are very heavily regulated, because regulators came out of the Royal Commission with their reputation slightly, tarnished as well. Had they done a good enough job? Had they enforced with enough vigour? And so, they came out of the Royal Commission really thinking about their own mandate and really coming to the banks and saying, you're going to see a different sort of stance and posture from us. APRA had never done a culture review. APRA is responsible for making sure banks are adequately managing risk and that they are being prudentially sound and safe. And they, for all kinds of understandable reasons, had spent most of their time really focusing on financial risk. It's a very long time in this country since a bank or a finance institution of any significance has fallen over or fallen into disrepute because of a failure to deal with financial risk. When you think about all the scandals and all the things they've got wrong, it is almost always on the non-financial risk side. We didn't get customer right. We did something that really damaged our reputation. That then went on to have financial consequences. So APRA started to take a very active interest in non-financial risk and in culture, and that appetite within APRA and APRA have really, I think, matured over the whatever it is, 6-8 years.
Yes.
And will only continue. There's at least one bank that's it's already in the public arena about whether they have sufficiently managed non-financial risk. So you've got a regulator who's really picked up that other side of the coin. And so when the regulators start to say this is what we think is important, you get banks and
Yes.
institutions, the regulated, start to think, oh, well, if that's important to the regulator, then it has to be, one, it means it is really important, but it has to be important to us. So they put resources into it. And it takes leadership and all of those things. The one other thing I would say that I think has really shifted is, in industry associations, and when industries think about themselves, you've always got to find the right balance between the things that are best done competitively and things that are best done cooperatively by the players in the industry. And, I think in banks that, within the ABA anyway, that they're having much more, I think, nuanced and mature discussions regularly about what are the things that, it makes no sense for us to compete on. So, for example, hardship, vulnerable customers, a real sense that it shouldn't matter who you bank with. If you are if you've lost your job and you're falling behind in your mortgage and you're getting into a lot of financial strife, it really shouldn't matter whether you bank with the blue bank or the yellow bank or the red bank. They'll all have their own little internal practices, but you as a customer should be able to rely on, minimum standards of service and care. And so they got together and they put in place vulnerable customer standards for the industry.
Yep.
They've put in place guidelines for how to implement that. Do they sometimes fail in the execution? Yes, but they've at least said we set ourselves this standard, that this is not something that is regulated. This is over and above what is regulated, because some of it is. But
Yes.
so they've actually set their own standards. Similarly, scams. It shouldn't matter. If you've lost money to a scam, you should be able to get a minimum standard of service and response, regardless of who you bank with.
Yes.
And I think that's a really, I think they really understood coming out of that really visceral experience that their organisation, they could do everything they could in their own backyard to make sure that they were being the best bank that they could, but that their organisation's reputation could not thrive if brand bank was doing really badly.
Yes.
And that, brand bank, is a really important idea.
Yes.
Because you want, on the one hand, you want the CEOs and the senior management and the boards of all of the companies in your sector to be elbows out, competing,
Yes.
vigorously on things like price for customers. But therefore it's, I think, only natural that you don't probably think of yourself very often collectively, but government sees you collectively and they will regulate you collectively. So you can be practically perfect, but if the rest of the industry is not working to the same standard, the government isn't going to exempt you when they decide to regulate whatever it is that they think the industry is getting wrong. So, I always say, if something needs to be done, do it to yourself. Don't wait for others to do it to you.
Yes, because it's going to be more painful. We've been asked a couple of questions here about trust.
Yep.
Trust and maybe culture. So I'm interested to talk about those two. We had a number of questions to our panellists yesterday about trust in the energy sector. Energy Consumers Australia has done surveying of consumers every 6 months for the last 11 years, and we ask trust questions. And I have to say, I haven't seen numbers like this since I was there, in banking. And some of them are quite worrying. So just to give you a quick example, and this dates back several months now, but in New South Wales, where we are, of all the major sectors, energy was at the bottom of the pile, and in fact was 2% below in trust measures insurers. And while I have no beef with insurers, that for me is always going to be the bellwether mark. And so trust measures for the energy companies are pretty bad. There's lots of external reasons for that, but there's also some internal reasons. How long do you think you can trade as an essential services provider where you've got this really eroding level of trust in the community?
Not long.
Not long. Yeah.
Would be my view. Look, what I would say to be, try to encourage optimism on this. You're absolutely right. The banks had been doing their own surveying of people from back before about 2000. I think it goes back to about 2006 or 2005, and you can just see this plummeting, trust
Yes.
in banks. So there's a positive negative test. Do you feel more positive about banks or negative? And that was like absolutely, when I got there, it wasn't quite in the toilet, but by the end of the Royal Commission, it was absolutely in the toilet. And similarly, do you trust the bank that you bank with? Do you trust banks generally? Were both terrible. Over 6 years, they've climbed out of there and they've climbed back to where they were in about 2005, 2006. Pre the GFC, pre the Royal Commission. As I said, they're not getting 10 out of 10, but they are back in a place where over mostly they've got a pretty good trust score. Underneath that general positive, negative, there's all sorts of questions about, that you get the 1 to 10 score, and the question is, if I got into financial trouble, I'm confident that my bank would help me.
Yeah.
That's, things like that have gone from very negative to positive.
Yes.
Again, I can't remember. It's not 10 out of 10, but it's back into positive territory. And they're the kinds of things you would want customers to be saying, I think, about your organisation. If you, I think, drift at the bottom of the barrel on trust and reputation for too long, I would say there's an inevitability about government. And if that manifests itself with customers continually complaining to their local member, taking complaints to the ombudsman, etc., and then you'll have the ombudsman doing reports that saying this is getting worse and the minister's getting briefed on this. There's this momentum that builds where elected representatives serving the interests of the people that elected them, they like to get re-elected, so they like to do something when there's an issue bubbling away. And they don't have a lot of tools. If they fund you, they can defund you. If they regulate you, they can whack on more regulation. So, or they can decide, we don't know what's going on here, but it doesn't look good, so we're going to have an inquiry into it.
And then that
leads on to something else. So, this is the canary in the coal mine.
Yes. And a related question then, just in terms of culture, which has come up in some of the questions here. I mentioned earlier this sort of reciprocal obligation that a duty is owed to each party. One of the things that we find attractive about that, and in fact, talking with some of the industry partners, they find this very attractive too. And you heard Mark Collette, who's the CEO of Energy Australia, talk about this as his one idea that he would take forward yesterday. A consumer duty or a duty to consumers where, the retailer, for example, has an obligation to deal fairly and honestly with a client base, that forces people to ask questions. Would I sell this product to my mum? Is this the right target market? Is this distribution strategy correct? Rather than this kind of regulatory arbitrage question. In the energy sector, I'm reliably told by people who know much more about this than me that there's something in the order of 12,000 rules. Thousands of pages of rules. And so there are whole teams, there are armies of people whose job it is to try to navigate their way through that. And you can't really criticise people for trying to game a system if the system is a game, in a way, right? So did you see the cultural maturity of the banks grow when they have to be able to ask those questions and then demonstrate that they've thought about those points?
Look, I think regaining trust for large organisations or for a whole industry or for a government or, in some ways it's not that different than regaining the trust of a friend, where you've had a falling out of something or, you have an affair, you've got to do something to regain trust.
I can only imagine.
But, you have to consistently behave in a way that makes you trustworthy. You have to actually earn it back. You have to consciously think about it. You have to be able to demonstrate, I am now behaving differently than the way that I behaved when I betrayed your trust. And I am doing it in such a reliable and consistent way that you can have confidence that I've learnt that lesson and I'm not going to do it to you again.
Of the change.
And there's proof.
See it,
And so, one of the things I used to say to the industry, because of course, people don't know you're doing something different unless you're telling them. And so there was a lot of, money going into advertising, etc. And so this is all very good. Keep doing it, but don't advertise unless you've got something to actually say, because you can't communicate your way out of something that you behaved your way into. There's only one way out, and that's behave your way out of it. Now, banks, I think, were incredibly fortunate that they were given this unexpected golden opportunity when COVID came along to do something that I think demonstrated to Australians, because people would say, have they really learned their lesson?
Yes.
And it was a fair question.
Show me the evidence, yeah.
Show me the proof. When they came out and did something that no Australian would ever have expected them to do, said you can have a holiday from paying your mortgage for 6 months, because it was so unexpected, because it was so out of character, because it was so, vastly different to anything, and against their commercial interests. It was, it was a big jump back into trust, and then after that, more of a slow build. But, it was that when you surprise and delight someone in a way that meaningfully changes their lives in a way at a time when they were terrified, it makes a really big difference. So you're not always going to have that crisis that you can, use the crisis to demonstrate change. But there will be, many, many things in your own organisation where you can think, you know the things that customers don't like, and they're probably very similar in each of your organisations. And, even if there's kind of 3 things in the industry that says, let's get together, we're not going to do this anymore.
Yeah. Well, relatedly, I mean, I don't know if crisis is exactly the word, but we are going through an energy transition, and sometimes it feels like a crisis. And so the related question is there an opportunity for the energy sector to utilise this once-in-a-generation change that we're going through to surprise and delight, to actually show that level of investment and engagement? I think there's probably 2 ways of doing an energy transition. You sort of swap out the energy source and hope for the best, or you actually say, well, while the hood's up, there's a chance here to deal with questions of equity and fairness and make sure that people who need extra assistance are getting it and so on. That's something that we're talking about a lot, and we know that other sectors have done much the same. One question I was going to ask you mentioned communications. Everybody here, or many people here, would remember your role in speaking directly to the Australian people during this remarkable crisis that you experienced in Brisbane and surrounds with cyclones and the terrible floods in 2011. If you don't mind me saying, what did you learn? What kind of lessons do you think the energy sector could learn about putting forward a narrative that comforts and explains? Because that's something I think that we've all recognised is probably lacking here in the energy sector regarding the transition.
Look, one of the things I would say that I think the sector does very well is when there are natural disasters, people often complain how long it takes to get power back on, but actually when you look at it, you do a pretty remarkable job, and I know you do incredible work in some very remote places, and it's hard for ordinary people to understand what it might be like to try to get crews in and try to get power restored quicker. But actually I think that's something the industry does very well, and something that, is probably worth promoting and explaining to people. But I think the transition issue is kind of different. Like when there's a natural disaster and people have got no power, it feels life and death. It's really scary, and it's horrible, and there are really difficult issues. The transition is going to be much slower, it's not a 2-week disaster.
No.
It's going to evolve and evolve and evolve. But I think if you you're at the front line, you've got ideas about how you could use this moment of change to redesign some of the things that are currently maybe baked into your systems in a way that might be better and fairer and, surprise and delight customers. I would say don't leave it to government. There's plenty of good people in the public sector and regulators and government working on these issues, but none of them know it like you do. None of them know your customers like you know your customers. How can you be part of that public conversation, explaining to people? I mean, one of the things I would always say about any kind of crisis comms, and while I'm saying the transition isn't quite that, but I'm sure it feels like it sometimes, don't sugarcoat things. The public, particularly when things are unknown, scary, they don't know what's going on. Surprisingly, I've found that if you tell them the most terrible thing, it gives them relief and comfort because they know you're not lying to them.
Yeah, it's
if
not
you
sugarcoating,
say, the bridge is going to close in 25 minutes, you need to get out now, because your house is going to flood to the rooftop. Like, that's a terrible thing to tell someone. But it gives them, great, now I know what I've got to do. Absolute clarity, action. I know the time frame. I know, get everybody in the car. It's that, just Australians are pretty happy to be given it plain.
Well, on that point, one of the questions
I was here for some of the last...
sorry,
just very quickly, for some of the last panel, and somebody said that they'd seen the most loved energy company on a bus. I thought, I don't think any bank's ever done that.
No,
banks don't expect to be loved, but they would like to be at least trusted.
No, they just buy the bank, buy the bus.
But one of my friends who works in advertising, she just says, just stop all that stuff. Just stop all that. Just do what you do. Just, give people good mortgages at fair rates. Stop telling us, all this fluffy stuff. Just get on and do it well, and make sure I know what I'm getting.
Get the core work right. Final question for you. One of a great question here. If you were to be speaking to a fellow leader in the energy sector, what personal advice would you give them based on your experience in banking? Well, what's the one or two things, if you sat down with a table of CEOs who were saying, God, what should we do? What are the one or two things that you'd tell them that they could do straight away?
I think it's probably as simple as lead. When I think about what some of the things that made a big difference in the banking sector was I was fortunate to have a number of senior CEOs who were personally driven. This stuff has happened on my watch. I'm going to fix it on my watch. And they were personally driven by wanting to be the one or two who made a difference. And so I would say, what are you doing about the trust figures? Not just in your organisation. Collectively, what are you doing? And if the answer is not much, then what could you be doing, and how best to do that? And there's hard questions in that, because some of those will be, could mean anti-competitive discussions. So you'll actually have to go and make an application to the ACCC to have those discussions. So there's a whole lot of execution behind the scenes. But if just looking at your trust numbers, if you're a leader in this industry, what are you doing about them in your organisation and with the rest of the industry, and what could you be doing? And then how do you tell government and regulators, we've heard, we're taking action.
Okay, very, very good advice. Please join me in thanking Great Australian, the Honourable Anna Bligh. Thank you, Anna.